My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Have you ever thought of investing in Southern California? Probably not. If you've listened to all the naysayers out there talking about get the heck out of California, you've heard about all these folks from California moving to Texas, you've heard about all the landlord nightmares dealing with California tenants and bureaucracy and the government, chances are you're probably not thinking of California as a great place to invest. But today's special guest is going to show us exactly why it is a good place to invest, because that's what he does. That's what he's involved in, day out, not only as an active real estate investor himself with a substantial portfolio of Southern California properties, but also as a broker who works with investors buying and selling properties in Southern California. So Anthony Walker, welcome to the show. Great to have you.
Thanks for having me on. I'm excited to be here.
So Anthony, I kind of gave us a spiel there, but maybe first things first, give us a little snapshot of when it comes to real estate and real estate investing and real estate business, what do you do?
So I have basically two complementary businesses in the industry, and this has been my sort of hypothesis from the beginning. I've been doing this for about 15 years. So I have my property ownership and investment companies, like a lot of people do. I invest mostly in multifamily right here in Southern California, but I have some retail and office properties as well. And then I also run a local brokerage company called Buckingham Investments. And we help people learn, plan, and invest in the same types of properties. So we do a lot of small and medium-sized apartment buildings, some larger ones here and there, and some owner-user commercial purchases, that type of thing. And we help investors understand kind of how the numbers work, how you can make sense of it, and how you can make money, right here if you live in Southern California without necessarily buying the plane ticket and going out of state to make all that happen. So
okay, well,
those two businesses together, they work really well.
Yeah, very, very cool. Little aside note there, Buckingham Investments, is that from Buckingham Palace or Lindsay Buckingham from Fleetwood Mac?
Neither, although I'm a fan. Actually, no, the company was started in 1963 by a gentleman named Jack Buckingham. So yeah, we celebrated our 60th anniversary a couple of years ago. And he was a super smart guy. He worked for the aerospace companies back then. He worked on the moon landing missions.
Wow.
Yeah, and he invested in multifamily property right here in South Bay, LA County, and was able to retire at 30 years old from his aerospace job. And he believed that if everybody understood how investing worked, everybody would invest. But there was really no good option for people to go learn how to do it without, having a mentor or going to get a degree or something like that. And so he created the brokerage company, Buckingham Investments, to help people understand how it worked. And then he figured we don't have to be, the high pressure salespeople that maybe give brokerage a bad rap as well. Yeah. If we can just help people understand how it works, they're going to come back over and over again, build their portfolio with us, and we'll have a lot of long-term relationships as we help people.
Oh, interesting.
Financially independent. Yeah.
And now are you the owner of the company now?
I'm the CEO. I own most of the company. Some of the original owners are still here, but they don't do as much as they did. Jack passed away in 2017. Yeah, he was in his mid 80s by then, as you might imagine, starting business in the 60s. But some of the other guys are still around. But yeah, day to day, it's me that you'll find it.
Okay, well, thanks for letting us go down that tangent for a second, Anthony. Now, there are a lot. Let's do it this way. There are a ton of negative assumptions about investing in California, especially, anywhere in California, but especially Southern California. What are some of those negative assumptions that you hear over and over again that just kind of drive you nuts? And then let's take a look at, how you really see things really are.
Yeah, I suppose I should actually just record a talk track on this because I get this question from like every single new client that comes to talk to us.
Yeah.
So, we heard it all. So, tenant-friendly regulatory environment, tenant-friendly, legal environment, endless levels of scrutiny and rules, in the landlord, tenant stuff, impossible to build, or difficult to build, expensive to build, which actually helps us. And so those are the main things that have people. It's too expensive is another one. You can't buy anything for a reasonable price here. Those are the most common ones I hear over and over again, and it's a tired trope. Yeah,
for sure. Yeah. Okay, so we've got that tired trope. What's not true about it?
Yeah. So, you have to contextualize all that stuff. The rumors are true. It's difficult to do business here. I'm not going to understate that. The legalities are much more complicated than they are in other states, other jurisdictions. And it's city by city and sometimes county by county here. So you have to understand exactly what you're doing, where you're doing. It would be easier to do business without them. Obviously, not going to just say it's like a great thing. But the reality is that the same factors that make the regulatory environment challenging are also what contributes to people's long-term success as an investor here in the market. We have those rules to tilt the scales in the favor of the tenants because, unfortunately, we haven't built enough housing here, and the market has not been able to produce outcomes that can deliver affordable housing for people in a big way in California for decades now.
Yeah.
And so the way that the government here has decided to do that is through regulation. The net effect of that, though, if you're a long-term owner, is yes, you have to deal with rent control. In some cases, yes, you have to deal with all the rules. But at the end of the day, it's impossible to build new construction for the same price that you can buy existing stock for. So you have an artificial constraint on supply. And because there's not enough of it, unfortunately, I'd rather there would be enough of it personally, but because there's not enough of it, you get that supply constraint on rents and on values over time. So it causes market rents to go up faster than it does in other areas. We are not susceptible to the sort of same boom and bust cycle that you see in a lot of the other areas, especially over the last few years that had a lot of new supply come onto the market. Our vacancy rate here in Southern California is the third lowest of any major market in the country. If you look at CoStar, we're under 5% after only New York City and Orange County, which is also here. You can't build enough. So if you're willing to learn it and deal with it, you're going to actually end up doing really, really well as an investor here. Does it make it more difficult to do an aggressive value add project and get a building and turn all the rents in 6 months and refi? Absolutely. It does. Does it make it more expensive? Yes. And are lawsuits everywhere? Absolutely. You have to be careful. And is insurance an issue? Of course it is. And it is everywhere else. But the underlying factors that cause that regulation are actually a positive thing for us. So I like to challenge people's assumption on this idea that really, the thing that you're complaining about is actually a symptom of a root cause that's good for everybody. And so, it's a problem, but it's because you're investing in a place that works so well and is in such high demand from tenants and owners that they had to even the playing field by making it difficult to do business here.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
It's kind of interesting, Anthony. You're one of probably 3 California-based and California-focused investors I've spoken to relatively recently. And fuzzy as my memory is, one thing that kind of popped out from a previous conversation was one of the advantages this other gentleman said about California is that property taxes tend to be a lot more reasonable given the value of the properties compared to other states and other jurisdictions, because there's no way that they're charging the equivalent amount of property tax based on the value of the property. What's your take on that?
Yeah, and that actually goes hand in hand with a broader trend I see on expense ratios too that I could expand on. So that's true. California actually has one of the most favorable property tax treatments in the country because we have Prop 13. So in 1978, and the Prop 13 is rent control for property owners, by the way. So like we got one for ourselves. In 1978, this was the last time inflation was out of control in the country, and they started the law in 78 to stop people from being priced out of their own homes from property tax. So your property tax rate, you're usually paying about 1.25% of your assessed value on your property. And then Prop 13 on top of that prohibits your assessment from going up more than 2% in any year. So you often see people with property tax bills from properties that they've owned 10, 20, 30 years, and they're paying like, a tiny 0.5% or even less of their property's value today in property taxes, and that's locked. So the longer you own a property, the better off you do, and they can't change it. In fact, you can actually challenge your assessment and have it lowered, but then Prop 13 still helps you keep it lowered if you were able to successfully lower it. So we're in a down market right now. Everybody gets all these mailers for the assessment people that will help you appeal that. But on the same topic, so in the same way that, properties are more expensive here. So on a dollar for dollar basis, right, your average deal is more expensive. So maybe your property taxes are the same as it is in another state. On a percentage basis, they're much lower. The same thing applies to CapEx and other expenses too, if you think about it, right? Like, so in our neighborhood, I would say like your average 10-unit building is, let's call it $2 million, maybe $2.2 million, right? And there's not much to that building. It's probably like 6,000 square feet. It's got a flat roof. There's no HVAC system other than some gas well meters.
Chain,
easy stuff, right? A roof on that building is about $30,000.
Wow.
Right, for a 10-unit building. And, that same building in the Midwest is worth, I don't know, 700 grand, something like that. The roof's probably still 30,000. In fact, it's probably more because you can't put a flat roof in snow country, right? It's probably 50,000. So, and the example continues. We have expensive properties that are much smaller by square footage. So the work to do the CapEx, to do the turns, your expense ratio tends to be really low here as a percentage both of rents, because they're also expensive, and as a percentage of the total property value.
So when you're talking to a new investor that's kind of thinking about getting into small multifamilies in Southern California, what do you sell them on? What's the major benefits that you sell people on for getting?
I mean, the biggest thing here is you've got this mismatch between geographically constrained supply. So we've got ocean on two sides, mountains to the north, and 100 miles of city to the east, and it's impossible to build any more on one side. And then on the demand side of things, we have a $1 trillion gross metropolitan product economy here. We're the third most productive metro area in the world. And so there's an endless supply of tenants from an endless number of different industries. Like the entertainment industry is going through heck right now, right? Big problem. In a market that was completely dependent on that industry, you would see a major effect on tenancy, occupancy, rents. I have not seen that because we have so many other jobs from other industries here. So there's a reason the banks call this a tier one market as well. They think it's really safe. It's very low risk. And, the big money investors agree it's not the most exciting place to invest. You're going to have to deal with rent control and all that. But you have this incredible demand on one side with this artificially constrained supply on the other. And everything else kind of flows from that. As a result of that, you get, outperforming appreciation compared to other markets, very stable rent growth. You've always got tenants. And there's absolutely zero competition from new supply, and you get the very best financing rates in the country too. So all of that combined together, if you're a long-term investor like me, you're going to be in really great shape owning stuff here.
No, that makes a ton of sense. Anthony, fascinating stuff. Thank you very much for giving us a different perspective on California and what the pros are, not just what the cons are. I think there's a lot of validity there, and you've proven it because you drink your own Kool-Aid and buy your own properties too when it makes sense. So, yeah. Hey, Anthony, if people want to connect with you and find out more, what's the best way for them to do that?
Yeah, check out our website. We've got a whole bunch of free educational materials. We actually do our own primary market research here too. So we have a whole graphical dashboard for that, even down to smaller properties that you can't find on CoStar. And that's at buckinghaminvestments.com.
Perfect. Anthony, thanks so much for being on the show.
Yeah, thanks for having me.
All right, everybody. See you later.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.